Welcome back, guys. So we completed case study 6 and now we are moving on to case study 7. So in this case study 7, let's have a quick look into what are the multiple choice question areas. ICAI carrying on the business of growing and manufacturing tea is allowed a deduction under income tax upon fulfillment of conditions. So this is related to income tax. So they need to make contribution to which scheme?
Yeah.
So this is income tax related area. Then select the correct option on the basis of the following two statement. So this is related to application of income and diversion of income. Other again it is income tax. What would be the GST treatment of stock lying? So there is some stock which is lying. So for that, what is the GST treatment to be taken? Then next, Banusari Private Limited is also engaged in sending raw tea leaves to job workers. So goods sent on job work. What is the form? So again GST related. With respect to decision taken at fourth board meeting, the contention of director. So Companies Act. So this is on Companies Act. And descriptive questions analyze whether the activities are narrated by CA Puru. So as per IND AS 41, so FR related. So Chinmay sir has to answer. You are required to state income tax implication of withdrawal from deposit account. So income tax. And at last we got one question on auditing. So with what specific factors would be considered in formulating an audit strategy? So this is audit related. So that's the question areas, guys, and now we will move on to the paragraph discussion. So let me start with the first paragraph. Mr. Murali Lal and Mrs. Bansuri Devi have been residing in Manipur village since their marriage. They have been actively involved in agriculture and dairy farming business in their village and sell their output in nearby villages as well. They have earned much accolades for business they run and have incurred much wealth. Oh, good. So through agriculture they made good wealth, it seems. So there have been many instances where the couple felt that they could move on to a metro town to explore more, but without any knowledge of business world and regulatory compliances, they felt handicapped. Their children are also settled abroad. One fine day when they visited by CA Puru, a fast friend?
Fast food, like fast food.
Fast friend.
A friend of their son.
A friend of their son, who usually comes down to their village quite often to know about the well-being of their friends' parents from time to time.
It's surprising that she has so much of time to visit.
Friends' parents. Mrs. Bansuri Devi discusses with him about the agriculture operations. I don't know why all these things. She manages with the help of her team in the village and scale operations they maintain. Puru tells them about how agriculture activities are maintained and operated in the metro towns like Mumbai, where he lives and practices his profession. During discussion, he tells...
Why will agricultural activities are maintained in metro towns?
Yeah, that's what. So they gave just...
Okay.
During discussion, he tells that one of his clients, Messrs. KG Buddy Limited, a listed company, is involved in agriculture and allied operations. So just I am pausing it here. I wanted to ask one query to Punarvas sir. Sir, can a company be into agriculture activities?
Yes, sir. Generally, I mean, it will be going through various, forms. For example, ITC is into agricultural activity.
So you were referring last time.
Yes.
So I think that website.
I'll just show one thing. It's called e-Chopal. So where ITC is like an aggregator where it's directly from producer to the market, farm to producer, so to speak. Okay. So all the farmers of India, most of them are aggregated and then it's directly sold by ITC to various other consumers, so to speak. So anybody can buy, and this is one of the largest in the world.
Okay.
So they are doing excellent job, as you can see in the video itself. You can visit the website, guys. You can just search.
So they are like Amazon kind of thing.
They are like an Amazon sort of thing, and also they are giving their knowledge, their machinery, everything as well for a minor cut. So this is ITC's way of actually giving back to society, and in fact, because of which there are other products. Basically, ITC is Indian Tobacco Company. So obviously, one way they are killing people, and the other way they are producing a lot of goods, and because balancing the balance sheet and also balancing the life, so to speak. Because generally these farmers, as in this thing that they said that in the question, they don't have the knowledge.
Yeah.
So these guys are providing a lot of knowledge. There are educational, what do you say, seminars, etc. conducted, and how to farming practices being done.
Okay.
All those things they're doing actually free of cost.
Oh.
So it's like a CSR activity, but they are also aggregating and then selling.
Okay.
So in that sense of the term, it is one of, that is why this question I could link it to e-Chopal, because that is what these guys in the village now want to come to the metro and try to do something.
Okay. And as you said about CSR, I have one doubt in
Yes,
that.
sir.
In GST, usually CSR expenditure is not eligible for input tax credit.
Correct.
As per the recent Finance Act 23 amendment.
Correct.
So that's okay, because that is with effect from 1st October 2023, because specifically the law is made. So right now, lot of people wanted to know this, that before 1st October 2023, because this amendment is a prospective amendment.
Right.
Before 1st October 2023, I had some CSR expenditure. Now only it is disallowed for ITZ.
ITZ.
So before that, can I take? For that, only catch is that, is it a business expenditure
Correct.
or not?
Correct.
So what you feel personally, is CSR expenditure the business expenditure of the corporate?
Correct. So in section 37 of the Income Tax Act, they had a thing that all general expenditure can be claimed there. But an explanation has been added a couple of years ago where they say CSR expenditure is not allowed, sir.
Not allowed.
Any type of
Okay.
CSR expenditure under section
Reason?
37.
Reason?
The reason is very simple. If, for example, the CSR comes from 135 of Companies Act. So there they say you have to donate 2% of your wealth, of your profit.
Okay.
Now, if I give a deduction on that, it's like subsidizing the donation.
Oh.
So if I give 2% of my wealth to you and then give a 30% tax benefit.
Understood.
So first of all, I'm telling you have taken so much from society, the least you can do is give 2%.
Correct.
So in that 2% also, if I give you 30% tax benefit, then, I mean, let's say you have around 1.7%, what is the point?
Then applying the same principle.
Yeah.
So even before 1st October 2023,
Yeah.
if a company has incurred some CSR expenditure, they cannot take ITZ with
ITC.
respect to
Okay.
that.
But one catch there is, sir, in 37 it is not allowed. But any expense which comes under 30 to 36 will be allowed. For example, 30 to 36 are your specific expenditure.
Correct.
So if you actually, donate some money to some research organization, which will come under the CSR policy, then it will be allowed because it comes under the respective scientific research expenditure sort of
Correct.
thing.
But sir, actually that is fine. That is
Yeah.
specific allowability.
Yeah.
So, but here the point is about whether it is in the course or furtherance of business. Because in
correct.
GST it says.
Can I
Yes.
analyze like this?
Yeah.
It is like a tax paid, but not to government, but to society directly.
Correct. Correct.
So the tax what you pay to government, you don't take it as deduction. So the CSR expenditure what you spend is directly given for society without going through government.
Right.
So it's like you
But
can
tax paid is allowed as deduction.
no, it will not be.
No, it will not be. What
Not
he's trying
be,
to tell is instead of
It's a tax
giving to the government, you are giving
It's
it to
another
the
form
outside.
of a tax itself.
Tax.
Yeah.
So your tax rate is not 25 to 27. Like
27,
you can think on those.
And any donation that you make under your ATG, etc., those areas it's allowed, sir. Even if it is CSR.
Yes, sir. Yes.
So
yes.
apart from that, especially in 37 for furtherance of business, any general expenditure is not at all allowed because you will not allow subsidizing the donation.
Understood,
You're supposed to make full 2% with your heart and ignore the benefit of the deduction on which you will save tax anyway.
Understood.
So that question is not there, but it's a good
Yeah,
point.
yeah. It's
Good point.
something related.
Yeah,
so
yeah.
probable areas we are actually discussing.
Right.
And
You can.
so the company is also involved in various other types of animal husbandry operations and works on the same scale as Mrs. Bansuri Devi and Mr. Murlilal work in the village. On getting curious, Mrs. Bansuri Devi asked him about the form and style in which KT Buddy Limited works in the city. Puru tells her that unlike villages in corporate world, large businesses have to follow certain accounting standards while maintaining books and balances of their business. Standards relating to agriculture set out accounting for agriculture activity, the management of the transformation of biological assets, living plants and animals into agricultural produce, and harvested product of the entity's biological assets. The standards generally require biological assets to be measured at fair value less cost to sell. So he tells her about the following activities carried out by KT Buddy Limited. Sir, is there an accounting standard on
Yes, that's
agriculture?
an interesting point because accounting standards or IND AS IFRS usually don't have specific for an industry.
Okay.
Like software standards we don't have, pharmaceutical
okay,
standards we
okay.
don't have. But for agriculture, they have a separate standard. That's the only exception I would say that where a sector specific standard has been given.
Okay. And in this regard, yes, sir.
sorry. Living plants and animals, so that will be treated as your in the
As
standard
the,
as biological
so
assets.
Biological
TCS 41, as they also use that word here. The management of transformation of
Biological
assets.
assets.
So you should have satisfied these conditions.
So like if it's only in agriculture. So I'm just asking, like if I use of course the bulls etc. for the farming,
they are also part of biological assets like dairy farming.
Okay. Because I mean I can connect that one in this thing. What is the income tax? There were temples who were having these elephants.
Correct.
Now are they assets? Can you claim depreciation?
Okay.
Was a question which was raised in all these various temples of Kerala especially.
Okay.
And
even in Tamil Nadu.
Tamil Nadu also you will have. So initially they were allowing and all those things. Then they made an amendment in 36 saying that no, it cannot be an asset. But when you obviously, can it be expense? But is it an expense? If I buy an elephant, so to speak, at 1 crore and I expense it off. So later they said that once the elephant dies, whatever the carcass you sell, you can subtract that skin, etc. You can subtract, and the remaining can be claimed as an expenditure. Is what they had told. That is when an animal dies.
The reason why you need a separate standard for the biological transformation is, this famous concept of inventory valuation, right?
Yes.
So imagine you have 100 cows at the beginning. You purchased 10, and you sold 10, and at the year end you have 102 cows. So the question is, the 2 cows, how do you value it? Is it first in, first out? Where did it come from?
Generated. Internally.
Accretion to the asset.
Yes, it is like a bonus share.
Bonus share, yeah. Right.
So that's why they thought, okay, we need to clarify. So the standard has been created.
Then when it comes to GST, thank God, all services in relation to agriculture or agricultural produce is exempted. So we don't have to pay any GST. For example, the previous ICAI Chopal, so they are providing some service and doing the katna. They're collecting some money. Some are free, some are chargeable. So like farmer education training or supply of agro machinery, etc. So whatever amount that they collect also, they don't have to pay GST on that. So because we have one exemption in notification 12 of 2017, and even certain sale of, even in GST, these are goods actually. Live plants and animals are goods. Goods, but they are exempted from payment of GST. So no need to pay GST on sale of animals. Even the animals can be sold like stock in trade. So usually, like lot of people will be selling, selling animals.
Poultry farming.
Poultry farming. Unless otherwise, it is processed meats. If processed meats like Fipola, etc., like what they are selling, processed meat, that will be goods and chargeable to GST. But live animals, so will not be coming under goods. So
and it's 18% only, sir. Rate.
Yes. And he tells her about the following activities carried out by KG Bhatti Limited: managing animal related recreational activities like zoo, fishing in the ocean, fish farming, development of living organisms such as cells, bacteria and viruses for research, growing of plants to be used in the production of drugs. So yes sir, so you can carry.
Punarvas, I can carry on. Hearing about this, Mrs. Vasuri Devi persuades Mr. Murali Lal to set up a company in town under Puru's guidance to expand their business outside the village as well. So Puru assures Mr. Murali Lal on all his queries and tells him that he and his team will help them at every step in setting up their company. So predominantly the incorporation of the company.
That's why he's going there every time.
That's why he's going there. Correct. That's the reason.
Puru needs
because work. That's right. Soon the couple, with the help of CA Puru, set up and started operating their company in Mumbai under the name and style of Messrs. Basuri Private Limited. I think Basuri in Hindi is the flute.
Basuri, it's not Bansuri.
Sir, we are all South Indians, we call it Bansuri, but even I was thinking it's Basuri. Basuri is the flute.
Flute, okay.
So,
Basuri.
And his Murali Lal is obviously the Krishna Bhagwan's name, so Basuri Lal.
See how and all they connect.
So Messrs. Basuri Private Limited. So it's a private limited company, and of course in private limited company, as you know, there will be, these 2 people only can be the directors. So minimum 2 directors are needed anyway. Which ventured into business of agricultural operations with Mr. Murali Lal, Mrs. Basuri Devi, and one new guy is coming now, Mr. Prabhudeva, as the directors of the company. Mr. Prabhudeva is appointed as the MD, as the former directors are
Quite
They are former directors also and former directors. Former directors of the company are quite busy in the business already set up at Manipur. So these two people, that is Murli and
they're focusing on agriculture.
So basically they do the work, he just looks at managing.
So managing director. So as you know, managing director is the person who has been given the entire opportunity or rather responsibility of substantial operations of the affairs of the company. So he will be appointed and he will run the show. Any thing, if you lift the corporate veil, ultimately he'll be liable. So he's the main person liable, so to speak.
Same Prabhudeva.
Mr. Prabhudeva is appointed as MD, so he will be liable for everything.
Yes.
I mean, unless if anything happens, when you lift the
I think this point
veil.
is common even in GST also, sir.
Yes, sir.
Like in GST also, when the company has defaulted in payment of GST and the company is like a private limited company.
Right.
If it is a public limited company, as per IBC or liquidation, it will go.
Correct.
If it is a private limited company, the director is liable, the managing director, whereas the other directors are also liable unless they prove that they are not, looking after the affairs.
Correct. So same we can see in Companies Act also, sir. When you lift the corporate veil, the MD will be liable, and other directors who are like if you have a company as a CFO and any fraud happens in financial fraud, then the MD and the CFO will be liable. Same.
GST also same.
Income tax also same, and in that.
So guys, so therefore these three laws, the provision is same. Like whenever there is a default that has happened, so we will lift the corporate veil and management of the affairs of the company, like CEO, CFO or COO, whatever it is, and they are definitely be guilty. And whereas the other directors are guilty if the charges are proved, or if they prove that they have not committed the offense, then they will be relieved.
Correct. Perfect.
So if you are able to prove you're innocent, you will be in India. Otherwise, you'll go outside.
Go outside. Art of leaving.
Yes.
Is another thing. Art of leaving is
Correct.
right. So the company got registered under GST solely in the state of Maharashtra. Sir, anything that solely?
No, as they are doing business only in Maharashtra, that Manipur village only they are doing business.
Right.
So that is in Maharashtra. That's why they got registered in Maharashtra.
Right.
If at all, they open a corporate office in Mumbai, because they are actually opening a
In Mumbai.
Mumbai. So in Mumbai, when they open, so it is optional. Like in case study 6, how we saw, like either they can go for single registration within the state, or they can go for separate registrations. So here they are going for only single registration across Maharashtra.
Right. During the year, the company falls short of funds and they decide to borrow funds from the market. So now they are talking about borrowing funds. So when I say borrowing funds, of course, some part of FR also would obviously come in respect to reporting. Income tax will come, and of course, law will come for sure because it's a private company. The board of directors of the company, that is those three people, resolve to borrow. Resolve. The moment they say resolve, it means they are passing a resolution.
Okay.
So it's passing a resolution to borrow a sum of 20 crore. So 20 CR they want to borrow from a nationalized bank at a board meeting. So this is again talking about borrowing powers. We'll see that later. Held on 15th January 24. That is the board meeting date. Mr. Prabhudeva, who opposes the said borrowing. So MD only is telling don't want. And not in the interest of the company, has raised an issue that the said borrowing is outside the borrowing powers. So this entire paragraph speaks about borrowing powers. In case study 6 also we discussed what are the powers of the board. We need to just revise that again when we come to the question, because we saw a question. One of the questions speaks about this. Putting forward the following data. Share capital is 5 CR, reserves and surplus 5 crore again. Secured loan 10 crore. Secured against the asset of the company, and unsecured loan is around 5 crore.
So they already taken borrowing earlier.
Borrowing they have taken already, so I think that's why that guy is hesitant, because he is the MD. Anything happens, he will be behind bars. So I think that's the reason why he is little hesitant. After the meeting, since Mr. Murli Lal was in Mumbai, he wanted to discuss all the tax matters. Now taxation comes also with CA Puru and sits with him in his office for the same. First one.
No, every day he used to go. Now they
are coming.
Once initially he has to go. Yeah. With business expansion, Mr. Murli Lal has also purchased a controlling stake. So the word control here is again defined in your 2 clause 27 of Companies Act. Control is not just more than 50%. Control can also be controlling the majority of the board of directors of the company.
Sir, and one, sorry to interrupt you.
Yes, sir.
So control, in the context of control, so more than 50%, naturally control. controlling the majority, like if the majority board of directors are common between two companies also, there exists a control. And in India also, there is something called control by way of operations.
It control, if I say the two blocks of financial statements, one I would say the accrual matching concept, other is control concept.
Okay.
Because when they say what is the definition of an asset, asset is not owned by entity, it is controlled by entity.
Okay.
So if you take an asset or like hire purchase, a typical example, right? You may not own the asset, but you control the asset.
Okay.
So all the accounting standards, fundamental point is the control comes into picture. To be more specific in respect consolidation, to arrive whether there's a control, yes, there is a requirement of that 50% or majority of board of directors, but Ind AS go one step further. Like any other situation where you can establish that the circumstances indicate that entity is controlling another entity. Okay. Just to give an example, or even the institute has questions on those lines. If you look at the historical pattern of AGM, only let's say 60% of the people attends. That is the average in last 10 years.
Correct.
So if a person has 40%, he is said to have control. Because 40 out of 60 is majority.
Okay.
So in the actual circumstances, you see in legal terms, he has only 40%. Okay. But for all practical reasons, those who attend only will make the decision. Out of 40 out of 60 means he is only likely to have the powers.
Yes. So will controlling operations will come under control?
They use the word.
For example, sir, say for example, I'm having a hotel brand called as Oyo. Now you are having one hotel. So you are the owner of the hotel. Now you are not able to do the operations. So I'm making an agreement with you, wherein I will take over the operations. So you need to exit. You need to just take the money and go. Profit I'll give, but I'll not pay any amount to you. Like I'm not purchasing the hotel. Okay. So I'm going to do the operations. And out of the profits, I'm going to share with you. And that is also defined. Like 60% is the expenses, 40% is the profit.
You take a profit share, but without being an owner. So now, again, the Ind AS is a principle-based standard. They are not a rule-based standard. Okay. So they use the word called as relevant activities. Okay. What is relevant activities, they don't tell. So that is what we have to decide based on the judgmental application part. So relevant activities means for running the organization, who takes the decision, who is more responsible.
Then in that case it is controlling interest.
Controlling interest should be there, exactly. And for the purpose of that, they'll give you few element features like you should have a power which can come from shareholding, which can come from board of directors representation, or which can come from any other articles of association power. So power should be there, and when you make a decision, it should be resulting or affecting your financial position. Understood. So if you make a decision, it's not like, nothing will happen to me. You will have a profit share, like a portfolio management service companies. If something happens to the client, you will have a share of that. So your decision and your response is connected.
Yes. So as you said, like through articles of association, something of that sort. Sir, through a shareholding agreement.
Just to add one more point, there can be a situation where two companies can have control. Two companies need to consolidate because they satisfy different criteria.
Understood. Yes. So through a shareholding agreement, say for example, there is a public limited company and that public limited company is in the verge of liquidation and they need some, their market cap is somewhere like 500 crores, but they are having liquidity issue.
Correct.
They have short-term liquidity issue. Now they badly need funds because they need to repay the loans and the interest is getting accumulated. So now they need some 200 crores. The market cap of the company is 500 crores. Okay. So in that 500 crores, I am going to give 200 crores. My company is going to give 200 crores with the condition that we will make a shareholding agreement. Means my percentage is only 40%.
Correct.
But I'll make a shareholding agreement wherein your board should retire. So I should take over the operations. Entire board will be mine. So through shareholding agreement, can I start controlling the enterprise? Because I am giving my 200 crores. I don't trust the management of that company.
Yes, sir. Because 227 is an inclusive definition. It says control includes majority of directors or.
But here only 40%.
Percentage doesn't matter because for that matter, even if I give you 30%, I am an associate. You can call me an associate, but I am controlling the majority of directors. Because I am retiring your board of directors and I'm putting my directors on board or my people on board.
Yes.
So that shareholder agreement also will be part of the control.
Yeah. So this was a classic case which I saw in case of one educational company by name MT Educare Limited.
Right. Okay.
So this was the exact situation.
It was liquidated, sir. Am I right?
No, sir. They have
IBC.
IBC
got delisted for sure, but I think it's under IBC.
IBC. It is under IBC. So this is the exact thing that has happened. So I just wanted to understand, because what happened, Zealand board has taken over the operations, and per se they could not understand about the business, commerce business, how commerce teaching and all will happen, etc. They dealt like science. So that's where it backfired, and they were in the verge of like liquidation kind of, and IBC initiated. So that's
So
what
the existing
I got
people
this.
are not in favor of them taking over, right?
No, existing people like they were okay. They are telling because they need the 200 crores fund in order to meet the working capital requirement. Otherwise, the bank started telling like we will put the shares in the market.
Oh, okay.
We will release the shares which you have pledged with us in the market.
Yeah.
So then,
Correct.
what happens if the shares are given into the market? You should tell.
That's the thing. When you that's where whenever you invest in company in general, look at what percentage of promoters stake is pledged. If the percentage keeps increasing, that's a sign of risk.
But sir, usually when promoters' holdings are being pledged, they have to report it, right?
Yes,
Companies
reporting is
It's reported. That's where you should keep a track and say that if companies, the pledging of promoters getting increasing, so don't invest in that company. Like in
L&T, if I'm not wrong, don't have promoters now, right? All of them have liquidated, if I'm not wrong.
I mean,
L&T is one of
like their percentage, promoters percentage might be very
less.
less.
Yeah.
Yes, sir.
Anyway,
Yes, coming back
good
to this.
discussion, yes. Where were we? Yeah. We purchased controlling stake. So we stopped at control and we kind of lost control, but we didn't.
That's a very big area.
Yeah, huge area. Control word is a huge area, but it was a very good discussion. In Messrs. Kheti Limited, and is now a director in the said company. So yes, so he has purchased the controlling stake and is a director of the company in that Kheti Limited company itself. He wants Puru to tell him briefly about the performance of this company in tea market. So here they are entering into tea market as well. So tea is one of the largest exports in our country.
Okay.
That is the reason why income tax has given a lot of benefits to the tea market. Tea, coffee, and even to some extent rubber. That is the reason for these three things. There is a rule number 6 and 7, which will give you a lot of benefits. Like for example, 60% will be agricultural income, 40% is business
So
income,
you don't
like
have to
that.
worry about
Right. So if you see, I had the chance of visiting this Kannandevan estate, where I wanted to have tea. Generally, I am a coffee person, being a South Indian and not tea person. But then that tea that I had there, sir, was one of the best that I've had in my life. So when I said, can I buy? He said, no, sir, it's only exported.
Yeah, usually they give the status as 100% EOUs.
EOUs, yeah. So for
they
us,
are not supposed to sell.
what we drink is the 3rd, 4th, 5th degree.
They are supposed to sell waste.
Yeah.
That waste is what we are consuming.
yeah, that's how it is, sir. So
and if you want, you have to import.
You have to import. You have to import. So basically, if I want to have like authentic Indian tea, I have to go abroad and drink it. So, but there, that is the reason why, because there are a lot of benefits that are given with respect to what is agricultural income and what will be exempt and what is taxable income. So that's the reason why they have said tea market here. We'll come to that portion in a while. Puru tells him that for the previous year ended 31st March 23, Kheti Limited's composite business profit is what? The composite business profit is what they're saying. Before allowing deduction relating to growing and manufacturing tea is 50 lakh. On 1/9/23, it deposited a sum of 10 lakh rupees. So basically, income tax deduction you will get if you deposit certain amounts in these accounts, tea development account and all that. We will see the specifics of it later because there's definitely a question on this. During the previous year, 21/22, the company had incurred a business loss of 15 lakh rupees. Business loss of 15 lakh rupees, which had been carried forward. On 25/1/24, it withdrew 10 lakhs from the deposit account, which it utilized. Basically, in the year in which you deposit, the same financial year you need to use it. So they have, only then you will get the deduction, because the lawmaker is telling you set aside in the tea development account, use it for certain purposes for the development of that particular market. Then I'll give you the deduction. Otherwise, that 10 lakh, whatever you have withdrawn, I will add it as an income because you have taken the deduction.
Correct.
In that year you use it. Otherwise, I'll use it for the purposes for which they have specified. So here he has bought 6 lakh rupees for purchase of non-depreciable asset as per the scheme specified. So as per the scheme, if you use, then it's allowed, no problem. So out of 10 lakh, 6 lakh is allowed. 3 lakh for purchase of machinery to be installed in the office premises. Now, as we say, T development, T etc. should happen in the factory. Now, if I use something for the office, I'll use the money for the office, then obviously that deduction will not be allowed. Unless you use it in computers, etc. Or furniture and all, if I buy, then it cannot be taken as a deduction. If from that money which has been kept in the T development account. Third one, 1 lakh was spent for the purpose of the scheme on 5/4/24. So as you see, it should be done in that same year. If it is done in the next year, gone. So we will see that in a while exactly how it is.
So this year you don't get the benefit. Next year also you don't get the benefit.
Yeah, correct.
That's all.
Correct. So, right, next. Mr. Murli Lal wants to know about the income of the company for the year and the tax liability, if any, thereon, and about which Puru gives him an approximate idea of that at that time. So, generally, CS tells her what tax you want to pay, you tell,
Correct.
and we'll work back.
So,
it'll be like,
yeah, no, okay, continue.
yeah, so that's how it is. Right. Yes. So, next, second one, Mr. Prabhudeva had informed CA Puru, Prabhudeva is the director, about 2 peculiar transactions related to GST.
Yeah,
So
like when I read the word 2 peculiar, I heard like 2 peculiar transactions.
Peculiar transactions. So, 2 peculiar transactions related to GST, which he wanted to discuss in the presence of Mr. Murli Lal, relating to Basuri Private Limited. That is that private company that they started initially. In one of the cases, they send raw tea leaves to the registered job worker under GST. Raw tea leaves will be sent to the job worker under GST. Mr. Sharma in Mangalore, Karnataka. And further, the processed flavor tea, which is further delivered to the wholesaler in Telangana. From somewhere from Maharashtra, it's going to Karnataka, then Telangana, from the job worker's place in Mangalore itself, with invoice and the e-way bill being issued by the company's department from the Mumbai.
Yeah, we have a question on that, so we will discuss that.
Do you want to write like some chart or something like what is happening this stage?
I think sir.
So there is a question on that.
When we're reading the question, we'll answer.
Yes.
So my understanding is that the raw leaves will be sent to that worker.
Raw leaves will be sent to the job worker. Job worker will process it further, and he is sending it from there to Telangana. So even though the goods are sent from the job worker's place, but that will be added to the turnover of the principal manufacturer only.
Right.
The place is the job worker's place.
Right.
So that this information is related to that.
So one, TDS question which is not there, but which may come here is this job worker. Is it a contract or is it a sale to the job worker? But since the word job worker is there, it's a...
Sir, usually job work is a contract, sir.
Yes, sir. Correct.
So goods sent on job work will not be treated as sale for the purpose of GST. So goods sent on job work will be treated as movement, contract through movement.
Same, sir. Same in income tax also, it will be coming under 194C. Because there were many people, what they were doing, they were just selling it to them,
Yeah.
And then they were...
And in this regard, actually one super point is there. If the goods are sent to the job worker, it is not treated as supply at the time when it is sent to the job worker.
Okay.
However, if the processed goods are not brought back or sold from there within 1 year or extended time limit, then the goods sent to the job worker will be treated as supply after expiry of the time limit.
Okay.
Now, so at the time when I am sending to the job worker, so it is not a supply. So job worker will be receiving the job charges. Correct. So therefore, the TDS will be under section
194C.
Now, the job worker is not returning within 1 year or extended time as permitted by the officer. Now it is treated as sale in my hands.
Okay.
Sale in my hands.
That's for GST.
Yes.
Okay.
Deemed as sale in my hands. But that person will not pay anything to me. It will become deemed sale in my hands, and I have to pay GST.
Correct.
So the question of TDS will not be there.
Correct.
But you would have done already.
You would have already done
the TDS when I am giving the money. So when I am making a deemed sale, he need to pay me money.
Okay.
But he is not going to pay money. So because it's just a deemed sale.
Correct.
So the question of 194C will not apply.
Correct. Earlier what used to happen was, this was the Supreme Court decision 2-3 years ago. What used to happen was I used to give the stuff, let's say I used to give 100 rupees worth tea leaves and 10 rupees was the processing charges.
Okay.
So that guy used to give a bill of 110. So people were deducting sometimes on only 10 rupees TDS, then on 110 also.
Okay.
So it was like confusing. So that's the reason why they said no, it is always a contract. You should pay only on that extra amount, that 10 rupees obviously.
Okay.
But this is interesting, sir. After 1 year, it is a deemed sale as per GST, but of course as per income tax, it still remains a contract. That's why it's a deemed sale, obviously.
Yes.
Nice. That question is not there, friends.
It's there, it's there. It's there actually.
Oh, it's there, sir. Okay.
Next job worker it is there.
Okay, cool. But 194C question is not there. So you can add on that in case they ask, you can note it down.
So even that 1 year question is not there in this job work contract. Actually, there is another job work contract.
Okay.
That is the same continuation.
We will read that, sir. So basically, the 194C is an extra question. You can note that down. Further, he asks him about the treatment of another transaction. They had sent a special lot of tea, Rosa. This will be that export quality, to another job worker, Mr. Shakti Puri in Ratlam, for making flavored tea as per the directions given. So basically, I have given you some directions. You have to make the tea as per that. Further, due to a decline in the market of flavored tea, they sent fresh, normal, unprocessed raw tea with new instructions to the job worker to hold the earlier consignment in stock till a buyer is found.
So
That stock is, yes. That stock was with them only.
Correct.
So therefore, the time will be 1 year. It can be extended for a further period of 1 year maximum.
Okay.
So 2 years, not beyond that. Means they have to bring it. They have to bring it to their place. So means law is telling you incur the transportation cost. Come what may. You incur the transportation cost and bring the stock.
The new stock is easily sold, but the old stock remained in the godown of the job worker for over a year.
Over a year. That over a year is the point that is tested.
Right. Superb. Oh, this we didn't know, sir. Very nice. Over a year. Generally, when we are reading, we're like, okay, over a year. Doesn't matter. But these things are very important points. CA Puru guides them properly about the tax treatment of these two transactions under GST. Interesting. So, Hinmaya sir, you want to take the third question?
Yes.
Third point.
Mr. Murali Lal is happy that their business has gone online as well, and now they are selling their products through various e-commerce platforms. Mr. Prabhudeva shows his concern over the online selling part and wants CA Puru to keep a check on the working of the same during his audit. CA Puru assured him that this audit strategy would majorly be based on the fact that good part of the company's business has gone online. In evening, Mr. Murali Lal takes Puru with him to meet his old friend Mr. Babu Lal. Now friends are also coming, who resides in Mumbai with his family. Mr. Babu Lal had requested him for a meeting with Puru so that he could discuss the latter certain tax related issues of his family and hire services for tax related work.
Actually, sorry to interrupt. This shows that if you do a good job, you'll get more business. So this Puru has obviously helped them a lot. First, initially he was going, got business, then he called him over.
So now Babu Lal.
Babu Lal.
So far, the moral of the story is look for your friend and keep visiting their villages.
Correct. That's it. But in this, it was correct. Same thing happened.
Mr. Babu Lal tells Puru that his son Gautam is liable to pay 10,000 per month to Barka, his ex-wife, as alimony. Gautam, being an employee of PQR Private Limited, has instructed his company's HR department to pay 10,000 per month out of his salary
directly
to his wife directly and remit the remaining salary in his account.
Okay, yes sir. So in this regard, actually, alimony to wife, ex-wife, will it be treated as consideration?
Correct.
So like that one question is there in GST.
Okay.
Because GST quid pro quo, something in return. Consideration involved, you have to pay GST.
What is the return, sir? That peace of mind.
Exactly. So here I got a consideration, but what is the activity involved?
Correct.
So ex-wife means no activity. There is no activity. So consequently, it will not be treated as consideration.
Sir, peace of mind is not an activity.
No, not pain. That cannot be considered as activity. Activity means doing an act, not doing an act, tolerating an act. Tolerating will not be there.
Correct.
Not doing also will not be there. Doing an act also not there. So therefore, he will be happy.
Students will be laughing, sir. What is that act? Alimony, okay. Sometimes sir, it is all money because that's what happens. Tiger Woods, generally they have this prenuptial agreement. In India, it's not there, sir. Abroad, There's a prenuptial agreement. Before marriage only, they'll enter into an agreement.
Oh.
If you cheat on me with 10 girls, I'm not even joking, it's the truth.
Oh.
So then you will have to pay so much. So there's this golf player called Tiger Woods.
Okay.
They had an agreement with the wife saying that if I cheat on you with some 2 girls, 3 girls, then you have to pay. That fellow cheated with some 40 people. So everything went to her actually. So that alimony became all money for her. So that is how it is. So this alimony. So basically this is a question where 10,000 I have to pay alimony because in a divorce settlement. So the thing is, this fellow said, let it not come to me and me paying and all, you only pay off. He told the HR guy. So is it like a diversion of income, overriding the title?
We have one question on that.
Yeah, it is that. We will discuss that.
Yes.
Or is it like application of your income is the question. Yeah, you can continue.
Yeah. Per month, whatever salary to his wife directly and remit the remaining salary to his account. Mr. Babulal wants to know the tax treatment of such alimony given by Gautam in his hands. Further, he tells CA Puru that he works under a partnership firm in which he and his other 2 sons, Mr. B and Mr. C, are partners. The partnership deed provides that after his death, Mr. B and C shall continue the business of the firm, subject to condition that 20% of the profit shall be given to Mrs. Daya, that is wife of Mr. Babulal, and Mr. Babulal wants to know the tax treatment of such recipient in his wife after his death. So he's planning too much. He could have taken life insurance and closed it. Puru satisfies Mr. Babulal by solving all his queries and let him do it then. And quotes his fees to handle all tax related matters
Of the
family.
Yes, super. So guys, let's discuss the questions now. First is the MCQ. An SSE carrying on business of growing and manufacturing tea is allowed a deduction under income tax law upon fulfillment of certain conditions, like depositing amount in a deposit account opened in accordance with the scheme framed by the tea board. Deposits made in accordance with the schemes framed by other boards for agricultural commodities also qualify for similar deduction. A very simple question: which of the following schemes qualify for this deduction? So let us go to that sheet. 1 second, guys. Let's go to So basically, we have in income tax stuff related to tea, deduction with respect to coffee, and deduction with respect to rubber. So as far as rubber is concerned, 65% is the agricultural income, 35% is the business income. Tea and coffee, both around 60% is agricultural income, 40% is business income. Normally, if you are into you're growing, roasting, curing of the coffee. Since I come from a coffee plantation background, my grandmom was in a coffee planter, so she used to do the process of curing, then plucking the entire coffee
Leaves.
seeds, curing, of course, to see which is good, which is bad, then roasting, and then of course the growing of thing also, growing, and then the entire process, and then selling it. Okay. Since even the selling part is involved, so here it was 75-25 ratio. So 75 is your agricultural income. Selling is only the one small part, because what precedes that is your growing, curing, roasting, and there's a lot of process involved in that. So she had a 7-acre farmland, which I still remember during my childhood I used to go. Okay. So yes, in that, now if I think about it, my grandmom would have come under this slab, 75-25.
Then what is the difference between the 60-40?
Sir, in this, that growing, curing is not there, sir. So what they do, they procure from other growers, coffee planters. So some coffee planters, what they do, eventually my grandmom sold it to her nephew only. That fellow was a waste guy. I'll tell it in the class only. So he stopped the entire thing only. He didn't start. He just started growing and giving it to somebody.
Contract
basis. So for him,
now the one who purchased it will be processing it.
Correct, sir.
So he is just growing and selling.
That's it.
For him, 60-40.
60-40. Perfect. So if you do the entire process, growing, producing, then you're curing, roasting, and de-seeding everything, for him it will be 75. So like that, basically 3 things are given: tea, coffee, rubber, predominantly because all 3 are exported out of the country. Fresh coffee bean. And that's why if you see, there is also people from outside India also want to come to India to sort of take from us only and then come back and do the same thing here. Your Arabica and all those things, coffee bean, that is what it is. That's why if you see there's a Starbucks came to India because of that, because we are predominantly a coffee drinking population.
Correct.
But I hope you know that the national drink is tea. I didn't know that, sir. Few years ago,
National drink is tea.
Oh. I had gone to this thing, Bali or something. There is one coffee. It's called coffee luwak. That coffee luwak is they feed seeds to a cat. The cat eats. Next day, cat poops. From the poop, they make tea, coffee. It's called coffee luwak, sir. One kg is some 5,000 rupees.
Oh my God.
It's cat shit coffee. It is simple as that. But there when we are going, he asked me a question, what is your national drink? And I didn't know. Actually, it is tea. Right? We know national animal, national bird and all. National drink only we don't know. So that's why chai point which came, it says India runs on chai, they say. Okay. Because actually India runs on chai. Everyone wants tea. Correct. But in south of India, the situation changes. We have
one politician also called as chai wala.
Chai wala. yeah, sir. Correct. Yes, chai wala.
Yeah, run by. Controlled by.
So India runs on chai, chai wala runs India. That's all you can say. Yes. Right. So, yes. So, that's what. But in south of the country, we have our coffee. And coffee beans also are exported. But because we are a predominantly coffee drinking nation, at least the southern part, these fellows have come, our Starbucks and all those people. And now, you have your Tim Hortons. Just to give an overall idea, Tim Hortons also is a coffee, very famous coffee place from UK, has come to Bangalore now because we love our coffee. They set up their shop in Bangalore and Mumbai for obvious reasons. Same, our third wave coffee roasters is one coffee roaster and very famous, which is overtaken Coffee Day. That's one of the reasons why Coffee Day also opened, because predominantly we have a lot of waste coffee to sell because others were exported. Other things we have to give it to our people, sell it at 150 rupees, 200 rupees, so that we can sit and lot can happen over coffee, they say. Yeah, that is how it is. So anyway, coming back to the discussion, these other snippets are also important for the discussion, guys, because you will have an overall view. Coming back, now, whatever it is you are doing, you have to deposit certain amount to the, tea development board, coffee development or a rubber development board. So if you do that within, I'll just write it down here. Under this section 33AB with respect to the tea development account, whatever amount you deposit or 40% of the profits before deduction. Before certain deductions, you'll see that later because there are some regarding that. 40% of the profit before deduction, this has to be done. This, whichever is less obviously, will be allowed as a deduction. Will be allowed as a deduction. When you should do it? Within 6 months from the end of the financial year. Within 6 months from the end of the financial year, that is by 30th September, we should deposit, or before the due date of filing the return. Before the due date of filing the return. So due date of filing the return was generally September, but then what did they do? Now when tax audit, since it's going in now September, it has become 31st October. So basically within 6 months or before due date, you should do it. So this is, and if it's transfer pricing, it won't come to this, then it will be 1 month extra. So this is the scene. Anyway, so now we have tea, coffee and rubber. Now coming back to our question. Yes. Coming back to our question here. Which of the following schemes qualify in this regard? So as I told you, tea is already there. So the other answer will be our schemes framed by the coffee board and the rubber board. So this will be the answer. So coffee board is separate, rubber board is separate. So you can invest as per those schemes. If you invest as per those schemes, then of course you will be getting the deduction. So that is
the answer is simple as that. Tea is there, remaining is coffee.
If you know the tea, coffee, rubber, that's it. You don't have to know whatever I told, no need to know anything.
No, because question said which are the other boards. Tea is the other boards are coffee and rubber.
That's all. So if you know coffee and
rubber. So for spices, main point here is that for spices board, we don't have all these exemptions.
Correct.
Because spices, and that too we can easily find out odd one out.
Correct.
Odd one out.
Yes.
So in the A, B and D, there is spices.
Correct.
C, there is no spices. So odd one out, C is the answer.
Perfect. Perfect.
Sometimes guys, when you don't know,
you can follow pinky ponky. Yes.
No, that's what we say, that choosing one right answer or 3 wrong answers.
Correct.
You are choosing 3.
Sir, anything, I don't know, in anything in GST?
GST we have one point, sir.
Okay.
Actually,
yes,
there is one.
Yes.
there is one point related to tea, coffee and rubber.
Okay.
So usually we need to maintain accounts and records in every place related to GST. So certain accounts and records like input tax credit related records, tax payments, stock details, etc. So but for tea, coffee, rubber, there is a cultivator.
Okay.
And this cultivator will be sending it to tea board for auction.
Okay.
So tea board will do the auction and they will be making sale to one buyer.
Okay.
Okay. So now the cultivator takes the stock to the premises of the tea board for doing the auction. So when they do the transfer of stock to this tea board, this transfer of stock to the tea board is not a sale.
Okay.
But whether tea board is required to maintain any accounts and records related to this stock which they are temporarily keeping till the time auction is happening, no, they don't have to maintain any accounts and records related to this. So because this tea board will take a temporary premises to do the auction.
Okay.
So in this temporary premises, the cultivator will bring like some 20 lorries or 40 lorries of stock will come and stay and he will conduct the auction and the sale will happen. So actually in every place where the business is ordinarily carried out, we have to maintain accounts and records. Whether this auctioneer, tea board, usually auctioneer, tea board, coffee board, rubber board, we have these three boards only, even in GST also. So these three boards are not required to maintain any accounts and records. But of course that question is not there here.
Sir, but is the auctioneer, is he like an agent of the cultivator in this?
Yes, auctioneer will be treated as an agent.
So guys, one more in Indian Contract Act can be linked here. Auctioneer is an agent and for all actions of the agent, of course the main principal will be liable. So if that stock is gone there and it's destroyed by fire or something, then you know.
And here to the buyer who will raise invoice, maybe another question.
Yes sir.
Cultivator only will raise the invoice. So agent will not raise the invoice. Agent is just an auctioneer, mere agent.
It's an intermediary.
Yeah. So cultivator only will raise the invoice. So therefore entire sale value will be included in the turnover of cultivator, not in the tea board.
Same thing for accounts. Like that's what they would say. The seller is the cultivator.
So ultimately guys, this is a contract act also. For all acts of the agent, the principal is liable. But like for example, the stock is destroyed at the agent's hands and I've already sold it to the buyer, but the stock is no longer there. Cultivator only will be liable. In turn, cultivator can sue agent for breach of contract of agency.
But that should be a separate contract.
Correct.
Indemnity contract.
Perfect, sir. Because ultimate contract is between cultivator and buyer. So this agent cannot be sued because there is a doctrine of privity of contract, because private parties, two parties are there, others cannot sue.
Yes.
Perfect, sir. Very nice.
So that is with respect to this, and second question is also related to income tax.
Let me take that, sir. So here this concept, as we discussed earlier, it's concept of diversion of income and application of income.
Yes.
Diversion of income and application of income, and these concepts are so important that even in November 23 inter DT paper also they asked.
Okay.
In November 23 inter DT paper, in one of the questions they are asked that the court had ordered, let's say you have a house property, son had a house property, son got that house property only because court had told from that income whatever you are getting, 20,000 should go to your mom. Okay. So the father had written in his will, the property will go to the son only if 20,000 every month will go to my wife, father had written. So now income I am getting 1 lakh from that property, but is my income 1 lakh or 80,000 is the question. This they asked in inter.
Okay.
So that level they are asking now, sir. So is this application of income? Application of income is what I get 1 lakh, then I'll give 20,000 to my mother, 20,000 to wife, 20,000 to girlfriend, like that. Right? So that is one thing, that is application. Whereas diversion is where from the top, it's diversion of income by overriding title.
Okay.
Overriding title. Title means my ownership. Am I entitled to that 1 lakh rupees? No. I am entitled to only 80,000 because from the top itself it is overridden. The court has ordered. So here we need to see, is it like overriding title or not? So when we see the question, we will understand. I think it was in the evening when he went that one. Yes.
Yeah.
So if you see, yes sir, he could discuss certain tax here. Basically, he had to pay 10,000 alimony. How he pays that alimony, nobody told. Basically, ultimately, you have to pay 10,000.
Out of his, let's say, whatever
disposable income. Correct? Disposable income. Because wife is unfortunately disposed already. Other disposable income, he has to use that.
He has to dispose income.
Income now, he has to dispose. So, yeah, that is what it is. So, 10,000 rupees, How he pays, I don't care, but he has to pay.
Yeah.
He has decided that, boss, I don't even want that money to come.
Correct.
Let it go to my wife only.
I don't want to send her to GPay also.
Yeah, GPay also I don't want.
I don't want her
Contact block. From me, it's blocked. I told HR lady or lady, I assume lady, okay, HR department, that please send it to my ex-wife. So now 10,000 rupees per month to Bharka. However it comes, it can go. So it is 100% application of income.
It's still your income only.
It's an income but application of income. So in some other company, if I'm working or some consultancy fee, if I get, I can, that fellow could have given, Gautam could have given it to Bharka. So this is definitely application of income, not diversion. On the other hand, here if you see.
So in this case, that 10,000 will be treated as income of this person.
Yes, sir. Yes, sir.
So how can we say that it is not diversion, sir?
So diversion generally in income tax
some law should be there.
Yeah.
It is diversion.
Diversion of income is by overriding title.
So someone should tell.
Correct.
This.
Yeah.
You should not have a choice.
Yeah.
Okay, you should not have a choice.
Perfect. Because sir, normal English diversion, you are right. My income is coming, I am diverting it to my ex-wife. Correct. But here, when in this law, then it's a general rule of law actually. Diversion of income means by overriding title. Okay. So there has to be an order, as he rightly said. There's no choice.
Now, in this case, how it will become diversion, sir?
Which one? In this case, it's not. First case, it's not. It's application.
It's not. It's application.
If it needs to be done as a diversion.
If they say that, for example, reverse, alimony can be whoever has higher income will pay to the other one. Now, if I am a house husband, my wife is earning very well. Now I apply for divorce. So then we have a house. So there they say that income from that house, it's still with the wife only. I will say I want 50%.
Okay.
If you give me 50%, only then you can keep the house.
Understood.
So then the court will order in the divorce proceeding that, boss, you need to do that. So personal experience, one of my friends went through a divorce. So I was accompanying him and all that. Chennai only used to come family court. So that lady started off with 1 crore, sir.
Okay.
Payment. So this fellow was earning some 20,000 rupees per month. So she asked for 1 crore alimony. Then it slowly came down over like 2 years. It was a traumatic period for him, poor guy. But over a period of 2 years, eventually it came down to around 5 lakh rupees, full and final settlement. So there, that is just application.
1 crore to 5 lakh.
there, that is just application of income. But if it is overriding title, let's say he had a property which he didn't want to part with that property. But the court said from that property, whatever income you are getting, 50,000 should go to this lady. Only then you can keep that.
Okay.
So generally, this overriding title will come from a probate of will or a court order or an agreement.
If I visualize, it is basically like a straight line or it's like this angle and go this.
Correct.
If it has compulsorily, it has to go like this.
It is application.
Correct. So diversion is by overriding the title. So whenever I say diversion, you should not use the normal English diversion because everything will be diversion otherwise. Said come to me as going to you or don't come to me only, you directly go from there. That will be diversion.
Correct.
Generally we say in black money diversion of income we tell, no, that we cannot take here. So here the meaning is overriding title. So this is application of income.
Just one question. We are only talking about the son's side. Just for her side. Is that alimony taxable in her hands?
Alimony.
GST point already we saw. That is no consideration.
Here also no, because already this fellow is getting tax, right? Double tax. Nirmala madam will not.
No, but double tax. But in her hands, is it anything? Because if I say receive a gift, for you it will be not expense, but for me it might be taxed. So
no, but gift to a relative anyway is not.
No, it's not.
But here it is not because there is no specific section for alimony as such. But there are cases though. In one case it was held to be because she was already earning other income and she's getting extra here. It was taxed in other sources.
Exactly. So that can be taxed.
But there are other cases also where they have told because since it's already taxed there, it is not. So that there is no specific section as of now speaks about alimony and the taxation of alimony. Good question actually. Yes. So that is regarding the alimony point. Yes. That is why if you have a prenuptial agreement, which all the rich people in India actually have now, right? So I'm sure Ambani and Piramal, their business families merged, and I'm 100% sure that there would be a prenuptial agreement because if anything happens after marriage, there will be a proper planning.
So you also can keep the contract, but keep the blank ready to fill the name if you know that person.
Correct. So this is actually a very good, for lawyers to practice as well. Family law, a lot of cases like this will definitely come. Especially abroad it's there, but now it's picking up. Second one, if you see, Gautam being an employee of PQR has instructed his company. Okay, this is done. Sorry. Here, Mr. Babulal wants to know the tax treatment. Done. Okay. Further, it tells CA Puru that he works under a partnership firm in which he and his other two sons, B and C, are partners. Okay. Partnership deed. Now, the written document says, after his death,
20%.
Mr. B and Mr. C shall continue the business subject to the condition. Now, this is there, I have no choice. I will allow you to continue only if you give 20%
Similarly,
of the
what
profit.
you told, that rental, that
Correct.
Rental.
Now I understood.
Yes,
Okay.
sir. So 20% of the profit shall be given to Mrs. Daya, wife of Babulal. Very clearly they have given.
So
if you
this is
don't,
known as diversion.
diversion from overriding tithes.
so that it will not be taxed.
It will not be perfect. So if we go to the
So it will not be taxed in the hands of.
sir, it is my, I mean, it's not tax in the hands of this part, this thing. What do you say?
Person.
Person. Mr.
Person.
What's
Okay,
his name?
okay.
Babulal.
Babulal. Babulal only.
No, that partnership firm is paying, right, sir?
So partnership firm, basically for them, 20% is not to be taken because it is, yeah, that is how it is. So if you come down.
No, I mean, for them it is an expense, like something
Correct. So if you see payment of 20% profit to Mrs. Daya is application of income. It is not because it is
it's
Diversion.
of income. Next
Second
is what?
one is application.
Second one,
Payment of
alimony by Gautam to excess is diversion. No, that is application. So reverse. So both
Just
of
the reverse, yeah.
both of statements are incorrect.
Option D.
Both are incorrect. This is actually a very simple concept in CA Inter, which they have tested in final. Because generally these things will never even see. It's in my first chapter, first page only. These two concepts are given, but we don't study this, sir. That's the thing. Who's there? What is that
So
application?
they are
Diversion.
testing on basics as well.
Testing on basics. And diversion, generally we use the English word diversion and say, okay, amount is diverted, but that's not how we should see.
Yes.
Sir, third is. I
So
think,
now moving on to the third question,
Yeah.
which is on GST. What would be the GST treatment of the stock lying with Mr. Shakti Puri? So here we have two transactions related to GST. The second one. So what has happened is that first they are sending the raw tea leaves to their registered job worker under GST. So that is Mr. Sharma in Mangaluru, Karnataka. And further the processed flavored tea which is delivered to wholesalers in Telangana from the job worker's place in Mangaluru itself. So in this case, I think this question is related to the second paragraph. Second paragraph. So this question is related to the second paragraph, the tea rosa. They have spent a lot of tea rosa to another job worker and for making flavored tea as per the directions given. Further, due to decline in market of flavored tea, they sent fresh, normal, unprocessed tea with new instructions to job worker to hold the earlier consignment in the stock.
Okay.
So, as this stock is held in the job worker's place and is not returned within the period of 1 year. So, while discussing itself, we had a discussion related to this.
Right.
So, we have section 143, goods sent on job work. And the goods sent on job work should be brought back within 1 year or an extended time period of 1 year by the GST officer. If the goods are not brought back within 1 year or it is not sold from there, the processed goods, then it is deemed as supply as per section 19.
Okay.
So it is like interplay between two sections. So 143 gives the time limit.
Okay.
And section 19 talks about the deemed supply.
Okay.
So if the goods are not brought back within 1 year or extended time, it is deemed as supply in the hands of the person who sent it. So in this case, the company is sending it. So Basuri Private Limited is sending, so it will become supply in their hands. And here,
just to get the clarification, so in job worker nature is the goods will come back. That's the
yes,
basic
job worker should process
and then give it back.
send it back to the principal manufacturer, or it should be sold from there itself.
Okay.
So that is by nature. So here, what would be the GST treatment of stock lying with Shakti Puri? So GST payable in this case. Why GST payable? The time limit of 1 year has been breached and there is no question about extension of time limit here.
Right.
So therefore GST payable. But who will pay GST in this case? Whether the job worker Shakti Puri or Basuri Private Limited. So the principal manufacturer who sent the goods on job work. So therefore option B is the answer. No GST liability also wrong. Tax payable by Shakti Puri also wrong. Tax payable by Basuri on its removal from Shakti Puri also wrong. So because it is the stock which is there. So today itself the deemed supply, deemed fiction will come at like under section 19. But this point in the answer they have not properly given.
Okay.
They just said tax payable by Bossary Private Limited. But reason they did not tell that 1 year time limit point is not specified here. So just they said sending of unprocessed tea to the job worker in the first lot would be deemed as supply. But why it is deemed as supply? Not given. So therefore section 19.
That is open book answer, sir. You have to
Yeah.
yeah.
So maybe that's the reason why yesterday, like when we have discussed about what is the use of purchasing the lectures.
Correct, correct.
So now the student, when he is reading on his own, so he will not know as to why it is deemed supply, because we have deemed supply in some other place. Section 7 subsection 1 clause C, like that few activities we had. So in that it will come as deemed supply or in a different place. So the clarity they need to get, that's why I have discussed this.
Super.
Then the next question is also related to the goods sent on job work, but this is related to the first part. Actually, we don't have to refer to the first part and all, because directly they are asking what is the form that is to be filed by Bossary Private Limited. Usually when goods are sent on job work basis, it is not treated as supply in my hands.
Okay.
I am Bossary Private Limited, I am sending it to the job worker. It is not treated as supply. But the law mandates me to mention all these goods in a statement. I need to communicate, because the proper officer should know what goods are sent on job work and what is it returned within 1 year, what is not returned within 1 year. So he need to know. That's the reason why the documentation is ITZ 4. ITZ 1, form GST ITZ 1 is for availment of ITZ on closing stock, it will not come. ITZ 2 is for transfer of ITZ. Whenever there is a sale of business, unutilized ITZ can be transferred from transferor to transferee, for that ITZ 2. ITZ 3 is reversal of ITZ on closing stock, but that is no way connected here. The moment you see job work, it will be always ITZ 4. And also time limit can be tested.
Okay.
So there is a time limit for filing this ITZ 4. So that is, if your aggregate turnover during previous year does not exceed 5 crores, then we need to file this on a yearly basis. And if aggregate turnover during previous year exceeds 5 crores, sorry, does not exceed 5 crores, we need to file it on a yearly by 25th of next financial year. Means what? For example, financial year 22-23. So by 25th April. So by 25th April of next financial year, we need to file. Whereas if the aggregate turnover during previous year exceeds 5 crores, then half yearly they need to file. Half yearly means 2 times they will be filing. For the first half year, from April to September by 25th of October, and from October to March by 25th of April. So this is this form ITZ4, and usually this form ITZ4 will be filed by the chartered accountants, because they will maintain the entire data, so taken from the records of the company, and they will file this, and decent amount they will be charging for this professional fees. So this is one work which will be done by CA or CMA.
Sir, how to remember all this, sir? Because there are so many limits in I mean, this is okay, open book exam, but in the
so they have to revise, sir. DT, IDT, they have to keep on revising it. And the n number of times that they can revise, that will be better.
Correct.
So actually many students will be telling, like, sir, your That's It book has helped a lot. Your last minute revision lectures has helped a lot. Because of that only we cleared like that. Actually the fact is, because of that they are not clearing. They are preparing, and one day before the exam they are able to revise it. So without revision, even if you put years and years of effort also, without 1.5 days revision, you will not be able to do.
And if you read one day before exam, it's not part of the revision.
Revision, yes.
It is vision, losing your vision.
Vision. So they have to read it once, and thereafter they need to revise all these time limits and go. But forms and all they are started asking. Usually in GST they will not ask forms. That is in regular paper, paper 5. Indirect tax they will not be asking forms. In paper 6, interestingly they are asking.
Yeah.
So the next question is related to Companies Act. Over to Punarvas.
Yes. So here, with respect to the decision taken at the 4th board meeting, the contention of the director Prabhudeva. Let's just go to the 4th board meeting. What happened, just to understand. Half of it is story only. We need to figure out where it is. Yeah, here.
Before, sir, first.
Yeah, correct. Yes, this one.
Borrow.
Yes. So the company wanted to borrow 20 crore rupees from a nationalized bank. So why we underlined all this, or I'll tell you now. At a board meeting held on 15/1/24, opposes the said borrowing and not in the interest of the company is what they say. So coming to the discussion. Oh, sorry. So as far as the main powers of the board, as discussed in case study 6, very simple. Whatever the company could have done, if company had brains of its own, it can be done by the board of directors. So the board of directors have power to do everything. So predominantly, if this is in 179(1), 179(3) gives certain powers which can be exercised only through a board meeting resolution. In that board meeting resolution means they'll sit across a table like this and discuss, or we can do Zoom meeting also. That is also allowed. But it's not like where email is sent to your house.
Not by circular.
Not by circular resolution, where sent to your email ID, you will look at there, no discussion, vote. That is a different thing. So you have three things, D, E, F here. D is your borrowing funds. E is your investing money, investment, and F is granting loans. So here we are talking about 179(3)D borrowing funds. Interestingly, under 179(3)D, this can also be delegated to MD. This can be delegated to managing director. So in this case, those Basuri Lal and those two people, husband and wife, can delegate the power to managing director, where managing director himself can borrow for the benefit of the company. The delegation should happen via board meeting resolution, but this guy can borrow whenever he wants once he has the authorization from the board. This is one question. But there is one more section, 181C, which says that if you are borrowing money and that borrowing money happens to be more than the paid up share capital and free reserves, which is nothing but the net worth of the company. If you are borrowing more than the net worth, it's like, what is net worth? Shareholders funds. Shareholders funds is, let's say, 100 rupees. You want to borrow 100 rupees, no problem. You want to borrow 150 rupees. You are actually borrowing from outsiders more than what the shareholders have given. So as per 181C, they say you have to take the approval of the shareholders.
Even for private companies.
That will come to that. So who has to take approval? What resolution? Special resolution. By special resolution, you have to take approval. So basically, yesterday we saw in case study 6, we spoke about undertaking, sale of undertaking.
Correct.
Yes.
And we said sale of undertaking is not applicable to private company. So same here.
Okay.
Will this apply? Same, that was 181A. Now we are discussing 181C.
Okay.
So here, should I take the approval of the shareholders for this? For a public company, yes. So for a private company which has filed their annual accounts and their annual returns on time. So annual returns should be filed within 60 days from the financial year, and annual account should be filed within 30 days from the whatever AGM date, you need to file it properly. If you have filed this, no problem. Then for such companies, if you file your returns etc. on time, then this special resolution point will not come. 179(3) will override 181C. So in this 179(3)D is any type of borrowing. It can be borrowing up to net worth, beyond net worth, no problem.
Okay.
If it is beyond net worth, then if it's a public company, one extra protection, shareholders should agree. Now in this question, is it a private company or public company? Private. And if you see the question, sir, can you please go? Thank you. Here also, they are buying, 20 crores they are borrowing. And the law 181C says the borrowing should be from a company's bankers. So here nationalized bank, you should deem it to be company's bankers, because if they are borrowing 20 crores from a money lender, I'm just saying, then 181C, the entire concept, we'll have to see other sections, we'll see that. So it is from company's bankers. Now at the board meeting, that's okay, board meeting. It should not include temporary loans in this. So here temporary loans etc. they have not given anything, and special resolution has to be there. If you see the share capital and free reserves, it's 5 plus 5, 10 crore. They are borrowing how many? 20. And anyway, there's already a loan there.
15 crore.
Correct? 15 crore loan already is there. So definitely they are going way beyond the net worth. They are going way beyond net worth. If this were to be a public company, 100% you need the approval of shareholders. But in this case, Prabhu Deva, who opposes the said borrowing and is not in the interest of the thing, has raised that the borrowing is outside the borrowing powers. Is it outside the borrowing powers?
No.
It is not.
Not.
Because
Board-
it's not
board
a
has the borrowing
board has the power because it is not a public company. If it is a public company, yes, it's outside the borrowing powers. Because there the powers will come from the shareholder. So coming back to the question on hand. Contention of Director Prabhudeva. His contention obviously is invalid. Why? Because Vasuri Private Limited is a private company. His contention was it is outside the borrowing powers. No, it's not outside the borrowing powers. It is definitely within the thing. So that is all. So basically, ordinary resolution. If Vasuri Private Limited were to be Vasuri Limited,
then D is the correct
perfect, sir. Then D would be the answer. Then D would be the answer. D would be the answer. Some people will write A also and tell A will include C and D. All that we should not do.
Yeah.
This is as per the provisions of Companies Act. Everything provisions of
Everything is
Companies Act.
Companies
Yes,
Act.
no. A will, it should always be the specific answer. A will never be the answer. So if it was Vasuri Limited, then this answer.
Okay.
But it's Vasuri Private Limited, then of course invalid. So that is regarding that.
Yes.
Sir, anything related to borrowing? Borrowing, nothing in GST. I
Nothing,
guess.
sir.
GST,
Nothing.
nothing. Or even.
Only thing on borrowal, any interest that is being paid. So like the one who is receiving the interest is not required to pay GST because it is exempted. Because interest on loans, advances, borrowals, deposits, even fixed deposits or term deposits, etc. All that interest income will be exempted unless the interest is collected on account of delay in receipt of consideration.
Okay.
Like for example, I know you are my creditor. I have to make the payment within 3 months. And as I am not making payment within 3 months, you will charge some interest to me. So that interest will be taxable. But normal financial interest is there, right? Like borrowings, advances, loans. On that interest, no need to pay any GST.
And in income tax, even the interest portion which you pay will be
Is
allowed
as
as
deduction.
So that's fine. So I think the descriptive questions, Chinmaya, first one is your FR.
Okay, let us move on to the next question on IND AS 41. Analyze whether the activities narrated by CA Puru to Mrs. Batsuri Devi with respect to KHAD Body Limited within the scope of IND AS 41. Okay, what is IND AS 41 scope? Let me just cover it briefly. So IND AS 41 is the only standard which as a sector specific standard what we have covered earlier. So what is IND AS 41? IND AS 41 is on agriculture. Okay, now for the purpose of IND AS 41, what is the meaning of agriculture? It involves any agricultural activities, which means there has to be a management of biological transformation. Okay. And there are also situations like, okay, for example, typical things will be you grow trees, you have plants, sugarcane, all these things will be agricultural activities. You have poultry farming, you have dairy farming, that is also agricultural activities. But there has to be some sort of management involved. I'll take the example of whatever I'll ask in this problem only, then we'll look at the solution. So if you do a farming, you go to an ocean or you go to a place and you have fish and then you sell it. You are not making those fish grow.
Correct.
So it is not part of agricultural activities. Right. But if you do it in a pond, in a closed environment, that is you are taking care of it. You are putting the activities behind it. It will be part of agricultural activities.
Correct.
That's a broad part of it. We'll go a little bit more in depth in the question. Another part you should know, 3 standards can come together on IND AS 2, that is on inventory, then IND AS 16, that is on property, plant, equipment, and IND AS 41, that is on agriculture. So if you think, you take an example like there is an orange juice manufacturing company. So they have to grow orange trees, they have to pluck the orange fruits,
correct.
They have to process it, and then it becomes the packaged products. So this trees, when you grow, that will be part of IND AS 16.
Oh.
Because it is like a fixed asset. From the trees, you are making the fruits.
Okay.
It's like a machinery, you're extracting the product out of it. Whereas if that is a sugar cane, is a plant by itself, that's also a plant, tree is also a plant, but tree is in the nature of fixed asset because you're using the product. So that tree will be under IND AS 16, whereas the fruits you extract out of it, those activities will be part of IND AS 41. And once it is packaged, ready for sale, then it will be part of IND AS 2.
And sir, sorry to interrupt. Now, sugarcane example, sugarcane will come under IND AS 41.
IND AS 41.
Reason being, the plant itself we are removing.
Is used for sale. So, you are not using that for making any other agricultural produce. So, even when you are having orange fruits, you will value under IND AS 41 because as example also earlier, for natural products, you can't follow cost method. So, because IND AS 41 say you follow fair value method. Once you make it into a packaged product, now you can say that it is cost or NRB, whichever it is. But as long as you are under IND AS 41, the purpose of introducing this standard is we cannot establish the cost part of it. So we will only measure it on fair value basis.
Even tea, I guess, would be
same.
Because if you pluck all the leaves, basically only the main thing will be there. All the leaves
will be part of IND AS 41 on agricultural activities.
41, sorry, yeah.
So coming to this part, what are the different activities that they are having? They have given the list, and we just have to go through it one by one. Yeah.
Yes.
So you have 5 activities here: managing animal-related activities like fishing in the ocean, fish farming, development of living organization, growing of plant for production of drugs. Now, first one, managing animal-related recreational activities like zoo. Now, are you developing any animal or are you doing any biological transformation of those?
No,
the answer is no.
It is
you are just controlling its movements and for recreational purposes. So it is outside the scope of IND AS 41. We will not go for any fair valuation introduction like that, because so again you apply the concept why IND AS 41 is there, because if you have a cow, one more cow I want to value it, there is a biological transformation happens. So I need to value it, so I go with fair value basis. For these kind of animals, I don't do any activities, I don't have to value it. I have paid something, I would have got some animal, I value on those costs.
Yeah, so I will add one more point in this, sir, in GST. So for this recreation activities in zoo, they will collect some entry tickets.
Correct, yes.
That is exempted, whatever may be the amount, because entry ticket to zoo is exempted.
Okay.
So guys, whenever next time you are visiting a wildlife sanctuary, tiger reserve or a zoo, so if they are charging GST, take a photograph and tag Nirmala ma'am. Okay. So there is no GST on entry tickets to zoo.
Okay. Good. Nice.
Nice. I didn't know that.
Yeah, I also didn't know that. Fishing in the ocean, we can also discuss earlier. If fishing is there, like you are taking the fish, you are selling activities you are involving. But fishing, you are not doing anything. The fish grows by itself in the ocean.
Natural habitat.
The biological transformation, you are not managing it.
So sir, even that is a case of minor forest produce also, no sir?
Yes, like that is also.
Flax, bamboo.
Whatever is coming in the forest, you don't grow, it grows by itself. You might pluck it and you can might sell it.
In DT, there was a thing, fishing in the ocean. So fish, even the fish farming. Fish farming is second one. The normal fishing in the ocean.
Yes.
So fishermen go
and
they collect the fish and they sell it. Now, generally, it is sold even in Chennai. If you see, there will be a head fisherman.
Yes.
They'll collect everything from everybody and then he will sell it to other people. Now, the thing is, the question was cash dealing used to happen.
Correct.
So that cash dealing, the question is, if I give it to the main fisherman, the head fisherman, and head fisherman sells it to somebody else, and the payment made by, let's say, some ITC hotel is buying the fish for their customers, they make a payment of 20,000 rupees, 30,000 rupees in cash. Now, would it be disallowed was the question.
Okay.
So, because general rule, any cash payment made to agriculture is outside that 20,000 limit, which is there in now it's 10,000, so it is 40 A3, 40 capital A3.
Yeah.
So the question was, if it's paid to the direct agricultural guy, fine. For example, ITC, each opal, ITC paying money in cash to the agriculturalists, to the farmers,
it's fine.
No problem. In cash you can pay.
It is allowed.
But now, what about head fisherman? He is not actually a fisherman because he is just collecting fish from others.
Aggregator.
So it created a huge issue 3-4 years ago where they added now saying that head fisherman also is deemed to be fisherman. That is one. Second part is it says fish. What about crab, squid, prawn?
I think law of interpretation.
Yeah.
Yes.
That also went to the court because they said crab fellows like, what did we do?
Yeah.
Prawn guy said, what did we do? Squid and all so many marine aquatic animals and at least here at least this much. In Indonesia they eat everything. Frog, whatever you can, whatever moves they eat. So here, that's why they also said fish includes all those things. So they included everything under the fishing.
So that's a nice point actually.
Yes, sir. So that
probable
question. Yes,
Fishing,
of course,
you
of
keep
course.
it in mind. Yes. So fish farming means you control the
this
activities in a
comes
private
under,
environment. So in GST also it comes. So in here also it is part of India.
So this oyster thing comes here, no? When they cultivate these pearls, oyster farming.
Because you control it. You in a control environment where you take care of the water, fencing.
I was just reading some guy who was into farming, agriculture, he quit and he joined this fish, oyster farming. Somewhere in Andhra Pradesh, if I'm not wrong.
Yeah, Andhra Pradesh, lot of people will do
Now
this,
he's
the
minting,
oyster
sir.
farming, prawn farming, the
Correct.
shrimps. So that's very good amount.
Correct.
But it's a double-edged sword.
Correct.
If it goes also completely, it will go.
Because in oyster, I think the pearl also has a lot of value, meat also has value.
And they're all biological items. So there's a.
What about this dog rearing fellows?
Yeah, again, that's an interesting thing. If you're having dog breeding center and that is your business, that's part of India AS 41 agriculture.
Okay.
But if you have a factory, for security, you have 2-3 dogs. So that is the purpose of them is not a business there. So those things will not be out of India AS 41. That is outside.
Yes.
So basically, there has to be a business application activities and there has to be management.
So this fish farming will come under Ind AS 41, and the fish in that farming, the fish which is out of that farming,
you will value under NRV basis. Whenever it grows or it
Auditor will take one fish and then
physical.
No, so for that you said one more standard, na?
Yeah, no. When in Ind AS 2 that valuation inventory, but not at this time. If you do any further processing, like once you take out the fish, then you put it, maybe you keep it, you process it, cut it into small pieces, you make it into a package.
For storage, they have to add those preservatives.
Then what will come under Ind AS 16 here in fish farming?
Nothing will come here. Or if you have any pool, you're maintaining
the pond, etc.
Those kind of any infrastructural things you build, that will be part of Ind AS 16. But that would be anyway part of Ind AS 16.
Okay.
The special point for the orange tree was because tree is also a living plant. And there we have to specifically take it under the property plant equipment.
Interesting.
Yeah. So development of living organisms such as cells, bacteria for research purpose. So you are doing some activities, but you are not doing it for the purpose of a sale or even conversion purpose. So it is again not directly part of your products being sold, because the word used is either it should be for the purpose of sale or conversion in your raw material as a processing item. So if you're having, let's say, something related to poultry farming or let's say dairy farming, you have to give certain items for the cows to drink, to eat. So it's part of the processing items. You can say that is part of Ind AS 41.
So that research was done by AstraZeneca, for example, for COVID vaccine.
Those items value, whatever the activities you involve, items you have as storage, Ind AS 41 valuation will not. So again, because you have the purchase price to acquire it, you value it on cost basis. Regular standards would apply. Only when the value increase, for example, you have a cow, you purchase 1 year, it became 3 years, the price is different, because one, it would have happened over a period of 2-3 years, and the price of a 3-year cow is also different. So there the latest value becomes more relevant. The cost is not relevant there. So that is why they say that in those activities, we Ind AS 41 will take on the specifically violations. So development of living organisms also will not apply. Growing of plants to be used in production of drugs. So it is again on the processing, conversion of it. So definitely these things will be part of it. If it is for research purposes, it would not be part of it. For manufacturing, it is part of it. We'll quickly just read.
Means can we say some income generating activity if it is used?
Yeah, income generating, and you should be part of it. Like fishing in the ocean also is income generating. But you have to be part of
we should
managing that,
we should
transformational activities. Yes. It's also a kind of MCQ question only because the list is there. Just have to tell yes or no for those items.
Okay.
So managing animal related recreational activities, the answer was no, because there is no management. Fishing in the ocean, the answer is no, because the ocean is harvesting biological assets from unmanaged sources. So no management. Fish farming, yes, managing the growth of the fish is where you are involved, and therefore you are this IND AS 41 is applicable. Relating to development of living organisms, it does not qualify. It is not, because it is not for sale,
or for conversion into agricultural produce.
The two keywords you have to remember is that sale or conversion. It is not for sale, not for conversion. But this is growing of plants to be used in production. Yes, this is for the purpose of this conversion activity will apply.
Nice.
So yeah, these are the list of scope of IND AS 41.
Sure.
Yes.
I think the other
So
two is,
the other two questions are related to Punarvas, sir.
Sure, sir. So let's take the 8th one. It's slightly easy. Then we'll come to the 7th. I'll just show you the answer, and there we can discuss each point. What specific factor? This we can do a proper normal discussion. If we can, maybe some elements of
we can
SCMP or maybe I don't know. Let's figure out.
GST included information is there.
Yes, sir. So what specific factors for online shopping would be considered by CA Puru in formulating the audit strategy of the company in the above case? So this company is also going into online
e-commerce.
So they're probably hosting their products there, and they're purchasing also. So first I feel, in auditing, it's audit strategy. We have all done the audits. First, obviously you should have a proper system.
Any essay for it, audit strategy specific?
Strategy, that audit planning is 300, 315, all those entire risk assessment, and 330.
For
strategy, nothing is there. It all starts from that, your quality control, SQC1. Then your objectives of audit is say 200. From there it begins. For inter students, remembering the names of those standards only was a pain. But yeah, as far audit strategy is concerned, there are no specific standards. It's a very generic question, actually. Very generic question. So the students need not think of anything, but you are actually hosting your product in an online portal or online shopping or having a website, etc. What will you do?
Correct.
So first, obviously, you should have a proper system.
Correct.
So that system can be should be an automated, obviously. Automated system, information system basically, and a manual system. A manual system can be feeding the data into it, creating the product, all those things. But most important thing, the audit strategy is how are the payments getting captured? Is it getting captured through,
that is whether the payments are collected by the e-commerce operator or directly you are collecting and just using the e-commerce platform to
yes. So are you using just a platform to deliver, or you are collecting the payments? And of course there will be an intermediary like your Razorpay, service providers. So how is that being
any reconciliation being done frequently?
Reconciliation, all those points you have to write. And if you also have to add a TDS point. Now there is a new section 194Q which speaks about 194O, sorry, speaks about e-commerce, TDS on e-commerce operator. So
how
Amazon.
Much is the rate, sir?
Sir, 1%.
1%
of the full consideration.
Full consideration.
That's the deadly thing.
Yeah. I'll add one point here.
Yes, sir.
Under GST there is TCS 1%.
Okay. TCS is also there. Correct.
But income tax TCS is
different from GST.
Different from GST TCS.
How does this work?
GST TCS works like TDS under income tax. So the e-commerce operator will cut one.
TDS under
TDS TCS. There one meme is there now. Jayakumar meme like this reverse.
Okay. Right. So TCS under GST is like TDS under income tax. It's like e-commerce operator.
Write down. TDS under income tax equals to TCS. Okay, sir. Okay.
Yeah. So e-commerce operator will collect money from the buyer. So on that money, 1%, same gross consideration. That's why I said like TDS.
Yes.
Gross consideration excluding the GST component.
Okay.
So, but there while calculating TDS, GST component should not come.
Correct.
Because there is one circular. In CBDT, one circular is there. While calculating TDS, the GST should not be included.
Anyway.
Correct.
That is
even for rental,
anything for that.
So due to that reason, anyhow, we will calculate in both GST as well as income tax on the gross amount into 1%. So the e-commerce operator will remit in the name of the supplier, and the supplier will take that 1% as credit in his cash ledger.
Okay.
So in his cash ledger, but in income tax yearly, but here in the same monthly. And he will utilize it for payment of his monthly liability.
Perfect, super.
So effectively 2%.
2%. One under GST, one under income tax.
Basic.
And now what is the TCS under?
Same similar provision, but there are many circulars for that, and there are a lot of interconnecting points. So that probably will do it later. That same thing. So that is from the buyer's point of view, also has to deduct. So there is one section for a big buyer. If it's a big buyer, if he is giving more than 50 lakh turnover, that is one. Then for a big seller. So there are, even CBDT is confused regarding that. So they have released a very master circular sort of a thing with lot of interconnections. That is TDS, TCS interconnections.
Okay.
So, but yeah, those points have to be seen in the audit strategy, most important, because you have to check the reasonableness of the expense and also whether the compliance is done or not. Because if TDS compliance etc. is not done, again it's a problem. So that is the one strategy, and of course your manual systems.
Yeah, you can also do systems.
And also one more point can be added in this audit strategy. So it's like the e-commerce operator who deduct the TCS under GST, he need to file one return GSTR 8. And that will be reflected in their cash ledger. Suppose if it is not reflected in their cash ledger, we need to do some reporting under audit, like as per the records, e-commerce operator has deducted this much TCS, but in our records, electronic cash ledger under GST for the supplier, this much only reflected. The difference is on account of e-commerce operator not filing the GSTR 8 return.
Super.
Sure. So, and we can also include, like, because online transactions use like who's the authorization, systems related.
Correct.
Whether it
so they should have an organization structure and authorization structure as well, because it is again, because there will be some threshold limit, and based on the threshold above it, somebody has to approve.
Correct.
And that so maker checker concept.
Those charged with governance.
Correct. So those TCW, yes, all those things. Related. So that's very generic point, to be honest.
Maybe you can divide the points like DT related, then DT related.
I think that way is best.
But the answer is very horrible, sir. What they've given is very general stuff. But I think you should make it in a better answer, like DT related stuff.
Yes.
IIT related, controls related.
Controls.
Control system. Amazing subject we had ISCA.
Yes.
Which is gone now.
Yeah,
so
you guys will not have, but we had that.
Yeah, we had. Oh yeah, you guys will not have. But you have EIS.
No, that is also
now is not there, but of course you had. Of the writing.
You also have a past history to share.
Correct. So
and then one more point in indirect tax is that this e-commerce operator, like whenever I am making sale through the e-commerce operator, I have to compulsorily get registered under GST. So therefore, in this case, as they are selling the tea through e-commerce platform, so even though it may be exempted. Like, so the supplier, whether they are required to compulsorily register, not required. If it is agricultural produce which are exempted, supplier is not compulsorily required to register, and the e-commerce operator is always compulsorily required to get registered. So that's like, but that is vague, related to registration. But here it is clearly given that they are making a very good business turnover and all. So maybe if required, we can write.
And
that
even
point.
if you are like selling outside India, then even FEMA regulations will come. When it will become export of goods.
But usually in auditing, sir, what you feel like for these general questions, if we write like this connecting those points, will they give marks?
Yes, sir. Because here generally, I mean, generic points. If you see the answer, you will be like, what is that answer? They have given some. I was just going through there. Let's just come here. Ideally, I mean, personally, I feel they should, you should write, because they have asked for specific factors, right? So I think we should write, first is the information system, and then that is the automation and the manual, and then we have to write what points you should see. Audit strategy is
the related accounting records, like you mentioned records like journal entry, or journal ledgers, bank reconciliation statements, vendor reconciliation statements. You can mention those.
Mention all those things. So it's a very generic answer.
Then how the information system captures events.
Like very generic.
Control surrounding journal entries. So therefore, whatever we discussed.
It's one layer before, like general things.
General.
No, we discussed like DT related, related. No, that related only they put it here. System related, accounting related, process related.
No, but I think it will be like a 4-mark question. We need to write something in depth, specific, because they have asked for specific factors only. But the answer is generic.
Very generic.
Yes.
So that personally, I feel that you should add more to this, which we have already discussed. You can make a note and you can add.
Yes. So then coming back to the second question,
that we can check the answer and there only answer. But let me read the question, sir.
Yes, sir.
What are you are required to state income tax implications of withdrawals from deposit account during the financial year 23-24, relevant assessment year 24-25, obviously previous year and assessment year. Sir, we can see the answer. Here only I will write 2 points.
Sure. Because 10 lakh was the amount.
10 lakh was the amount set aside for the tea development.
Perfect. So in that 10 lakh, whatever was set aside, it is deposited to T development account. I told you it should be deposited within 6 months on the end of the financial year or before the due date of the filing the return, which is earlier. Then it will be allowed, full will be allowed as a deduction, but you have to use it, utilize it within that
Next
year, within that previous year itself. You can utilize it for buying any sort of machinery or plant, definitely. You can use it, but if it is used for residential purposes, you will buy one sofa and give it to the director's house from the T development account. That obviously I will not give the reduction. It should be used for specific purposes. Specific purposes given by that particular board. Machinery plant for the factory makes sense. Residential purpose doesn't make sense.
But like sofa, I can use it in factory also, like just for example.
Correct. But then again,
those things are not part of it.
No, there are specific points in that T development thing. It's predominantly the machinery for producing more.
Then why you said computers, sir? While discussing, you said computers in office. You said it is available.
It is allowed because again, computer is used.
Machinery.
Machinery. It is used for the purpose of development of the product.
Understood.
Normal machinery, office appliances again are not allowed. So what is not allowed is office appliances.
Like AC.
AC and all is not there, but excluding computers.
Okay.
So if you are using the money for computers, allowed. But if you are using other office like your furniture, etc., and other things like
and computers includes laptop, all those.
Everything, sir. Everything that will be the same. Then third one, again, any other machinery, if the actual cost is fully allowed as a deduction. For example, if you purchase a scientific research expenditure, scientific research asset, that asset is fully used as a deduction in that year only, under 35. So basically that you cannot use this money and for that scientific research, get deduction again, 35 also, here also deduction.
Sometimes you get weight deduction also.
All that and all, not it is not allowed obviously. And fourth one is you cannot buy any machinery for purchasing items in the 11th schedule. So 11th schedule is your tobacco, alcohol. So all those things you cannot use.
So alcohol for the workers.
Workers.
Cigarettes for the workers.
Not allowed. Yeah. So you can't use this tea development account for what? For this for something else. One brewery, micro brewery, you'll open there. Toddy shop, you'll open. Not possible. So in Kerala and all, if you go, toddy shops everywhere. Everywhere it's there actually, but yes. So that and all, you can't use that. You do it for separate thing, but can't use that money for that. Yes. So I mean, there were one is of course it's 10 lakh rupees being the amount withdrawn from T development account. Yes, account has to be utilized in the prescribed manner as we discussed, but will not include these four. Will not include these four. In the given case, taxability of withdrawal is there. First one, they have told that 6 lakh is utilized for non-depreciable asset they have given. That's fine. You can use it. It's as specified. It's allowed. No problem. So that is how it is. But before that, let's just see what is the business income portion. And I've already discussed how much is business income, how much is the agricultural income. 60% is agricultural income.
Correct.
So in the question they have given 50 lakh is the composite income. Composite is both. How much is business in that, how much is agriculture is what that particular rule says, and this section, rule 8 and 33AB. 33AB, so as I told you, amount deposited in the account 10 lakhs or 40% of the business.
Whichever is lower.
Whichever is lower. Okay. So here it is 20 lakhs or 10 lakhs, whichever is lower. So 10 lakhs is what you have to take. So what I will get is 40 lakh rupees. Now in this I have to do that 60-40. Generally, what people do, they'll first do this 50 lakh only they do. That is the problem.
Okay.
So first I have to subtract the deduction. After this deduction only whatever I get, then as per rule 8, I have to do the 60-40 deduction.
Suppose if 10 lakh was not there, then this would have been 40, this would have been 60.
Correct. True. So now 60% of 40 lakh is the agricultural income as discussed, and business income would be the remaining 16 lakhs. And in the question you would have seen that there was a brought forward
business loss.
So that obviously will be allowed as a set off under section 72. You can set off that. You can go on for 8 years anyway.
Correct.
Except your depreciation under 32, which can be set off forever. So there are other areas also which can be set off forever, but of course normal business loss can be set off for 8 years. So this was carried off from the previous year, 22-23 anyway, previous assessment year. So yes, carried forward. So that brought forward loss can be set off. So the actual business income chargeable to tax is 1 lakh. So where students really make an error is first they take 60-40 here, then they give deduction 10 lakh, make a mess of everything.
Okay.
That is one problem that we are facing. Anyway, coming back to this now. Now they are asking about the what is taxable, what is not taxable, etc. Now they have told 6 lakh is the amount withdrawn for buying an asset which is specified in the scheme, no problem.
Correct.
It's specified.
It's all.
Second one, they have told 3 lakh is the machinery which is put in the office. Now,
Correct.
10 lakh deduction in that it's not allowed. In that 10 lakh, I have to
3 lakh
add back 3 lakh.
3 lakh.
So 3 lakh
Then
is
whatever
taxable.
there we got as 1 lakh plus this 3 lakh.
Yes, sir. Correct.
Correct?
Correct. So 3 lakh, correct. You're right. Being the amount utilized for the purchase of machinery to be installed. Now, sir is asking, is 3 lakh business income, or in that 3 lakh also 60-40 I should do?
Correct.
That is the question. We'll come to that. So,
Correct.
should I do
Good
60-40, or is it there we saw 1 lakh? Is it 1 lakh plus 3 lakh, or 1 lakh plus
60%?
60% of 3
yeah,
lakh.
is the question. We'll come to that, sir. That's the last part. So 3 lakh being the amount utilized, machinery, definitely yes. Then we saw that 1 lakh rupees, in the question only we discussed, 1 lakh was used for the purpose of the scheme, but it was used when? It was used
Next year.
next year.
Correct. After that.
So it should be whatever the year it is withdrawn, it should be utilized in the same year. So here it was not done, so hence 1 lakh also will be. So basically we have 3 plus 1, 4 lakh now.
4 lakhs.
So there is again the rule continues that agriculture and non-agricultural portion has to be segregated.
Because
Reason being,
Yeah.
It was
it
not
has been deducted
Yes.
before computing 60-40.
Correct.
So therefore,
This is the
given
same
on
nature
the
as that
same
separate.
nature.
Same nature. Perfect. So in that, for 4 lakh, I have to divide 60-40.
Oh.
So 40% will be 1 lakh 60,000. So this 1 lakh 60,000 will be the chargeable to tax as the business
year.
income, and the balance 2 lakh 40 would be agricultural income exempt from tax.
Perfect.
So very simple. So it's a 4-mark question,
Nice.
5-mark easily, neatly you can do.
But today I learnt.
Yes, sir. We're all, that's the beauty of this, sir. We learn, like I didn't know about that biological asset actually.
Yeah.
And now in our classes we can connect.
we can use it. Yes.
So that is the good thing about this, is our learning experience for us as well.
Yes.
So-
So with this we completed case study 7.
Yeah.
Thank you
so
guys.
much. Thank you.